Hi everybody and welcome to TorFX Weekly Market Update. It's the 12th of July 2016. I'm Nathan Bray. I'll be your host. This week we're going to take a look at the Aussie ratings downgrade. We'll also check out all the major news events and what to expect for the week ahead. But first of all, let's break down the latest US jobs report.
Well, US payrolls roared back to life in June, adding 287,000 jobs. That is the most in the last 8 months, and of course that's come on the back of two very weak job reports. But what we're seeing is that this was largely due, of course, to the Verizon strikers going back to work. And what the other point that came out of this particular report was people over the age of 55 are now returning to the workforce, whereas people 16 to 24 are actually losing jobs. And of course this may be due to this rise in the minimum wage. Let's go and have a look at some of the figures, and you'll notice here that the average hourly earnings, which is a really important indicator as far as the inflation demands that the Fed has on the economy, and you can see there it's halved. It's down around zero at 0.1%, so that's not a good sign. And of course if we look at last month's non-farm employment change, it's actually been revised down, so they got it wrong. Could be due to this birth-death model that they use not working so well, but you can see there it's been revised down to about 70%, from around 30,000 to 11,000. So it'll be interesting to see if we do get any revisions on this particular figure as well. The other point, of course, is your unemployment rate. It's jumped up there from 4.7 all the way to 4.9%. That's due to this labour participation rate edged up a little bit. And what we're seeing is people that we thought were no longer in the workforce have actually needed to return to the workforce. So again, it's showing some lag in this employment market. The other big news story for the week was Standard & Poor's actually became the first rating agency to place Australia's AAA rating of sovereign debt on negative watch. So we've now got looking at a AAA minus rating, and the big four banks here in Australia also on a credit watch. But let's keep in mind the credibility of these rating agencies. We can see here from an article from the 2008-9 crash from Rolling Stone, where they came out and basically said that the financial crisis happened because the AAA ratings stopped being something that had to be earned and turned into something that could in fact be paid for. So looking ahead for the major news events for the rest of the week, we do have FOMC member George speaking on Tuesday, and of course FOMC member Bullard will be speaking later that evening. In between there, we do have some Aussie NAB business confidence coming out, and of course inflation report hearings on the pound. On Wednesday we have some Chinese data coming out, the trade balance. We need to keep a close eye on that one. Moving into Thursday, we do have a fair bit of news coming out Thursday. We've got the overnight rate coming out on the Canadian currency, so have a look at that. It's looking to remain unchanged at 0.5%. And then we have the employment rate on the Aussie and the employment change. So at the moment it's looking like we're only going to make 10.1 thousand jobs, and our unemployment rate looks like it may notch up following the US lead there up to 5.8%. Later in the evening we have the official bank vote rates coming out on the pound, and you can see there they're basically all voting for a reduction, and the expectation of course is a reduction from 0.5% down to 0.25%. And finally on Friday we do have some Chinese GDP and industrial production figures coming out, looking to slightly weaken compared to last month. And then Governor Carney will be speaking on the pound, followed by some manufacturing sales coming out on the Canadian currency. And to finish the week off, it's really all about the US dollar. We've got their CPI and core CPI, as well as their retail sales and their core retail sales figures, all looking to remain steady but still very close to zero at this stage.
Well, that's all from me. This is Nathan Bray for TorFX.